I'm Rebord, and this is TRM Talks. I am Global Head of Policy at TRM Labs. At TRM, we provide blockchain intelligence software to support law enforcement investigations and to help financial institutions and cryptocurrency businesses mitigate financial crime risk within the emerging digital asset economy. Prior to joining TRM, I spent 15 years in the U.S. federal government, first as a prosecutor at the Department of Justice, and then as a Treasury Department official, where I worked to safeguard the financial system against terrorist financiers, weapons of mass destruction proliferators, drug kingpins, and other rogue actors. On TRM Talks, I sit down with business leaders, policymakers, investigators, and friends from across the crypto ecosystem who are working to build a safer financial system. Today, we're talking to Sarah Hammer, Executive Director at the Wharton School. But first, inside the lab, where I share data-driven insights from our blockchain intelligence team. In the wake of Iran's recent attacks on Israel, we are seeing a new barrage of sanctions on the country. With Iran more and more isolated and its financial system entirely under economic sanctions, the regime will continue to look for new and innovative ways to evade sanctions and engage in international trade. In this context, TRM's blockchain intelligence team took a look at Iran's economy and the ways in which the regime has experimented with digital assets. First, we're going to understand Iran's crypto economy. Nobatex is Iran's largest exchange. It received 89% of all funds, domestic and international, that flowed to Iranian exchanges in 2023. In August 2023, Nobatex launched two new DeFi services, Crypto Wallet, Locket Wallet, and the decentralized exchange Nobadex. This essentially means that Nobadex is the first sanctioned DEX given comprehensive sanctions on Iranian financial institutions. In terms of other activity, Iran continues to develop a CBDC, a central bank digital currency. In fact, the Central Bank of Iran announced in early March 2023 that the CBDC was entering its trial phase after successful completion of the pilot stage of testing. TRM continues to closely track Iran's CBDC program. In February 2024, OFAC actually sanctioned an Iran-based ISC, which is a fintech, which most recently developed a central bank digital currency platform for the Central Bank of Iran. And Iran is not only interested in a CBDC. In January 2023, a Russian news agency reported that the Central Bank of Iran is working with the Russian government to jointly issue a new cryptocurrency, a stablecoin, backed by gold, to serve as a payment method in foreign trade. The stablecoin is intended to enable cross-border transactions instead of fiat currencies like the US dollar. TRM continues to closely monitor Iran's activity in this space as well. As we see sanctioned actors in the world, whether it's Iran or North Korea, Russia, Sudan, Cuba, Venezuela, they're going to be looking for ways to circumvent the US dollar, to circumvent traditional trade. And we're going to more and more see them look to cryptocurrency. We'll continue to monitor this. Now, let's sit down with Sarah Hammer. Sarah, thank you so much for joining me today. I feel like you and I have had so many fun conversations and excited to have one publicly today.
Ari, it's my pleasure. Thank you so much for inviting me. I really enjoy working with you. This is a highlight for me, and I'm really excited to talk about what we're doing at Wharton.
Well, I'm really excited to hear about it. And I think that the role sort of academia plays as we're building a new financial system is absolutely critical. And obviously, one of the most important business schools in the world, you are working really across all things future of finance, right? What does the future of money look like? Wharton Cipher and Wharton's Future of Finance, Center for Innovation in Finance, all things AI, UPenn, crypto. So really want to dig into all of those things. But before we do, would love to hear about your journey. You have had one of the most interesting careers in our space, as I see it, having done sort of traditional finance and now sort of ending up with this focus on the future of money from an academics perspective.
I actually started at JP Morgan right out of Wharton, and I had the great opportunity to start in fixed income derivatives and then move to the credit trading area. And I led the credit default swap trading book, including during 9/11, which I can talk a bit more about later. But being a trader really taught me about the challenges and opportunities of trading, clearing, and settlement. And at that time, we were trading, clearing, and settling on T+2. I'm sure you recall. We've shortened that a bit now, but we're still not at a settlement time that I think would be optimal for the industry. And then, moving to fixed income at PIMCO, for example, a very idiosyncratic market, really taught me about just where there are opportunities in our financial infrastructure to make things more efficient. So I became very interested in technology because of that and the opportunities to make the system more efficient, to reduce systemic risk through technology. And then at Vanguard, I had a really wonderful opportunity to work with one of our directors, Raj Gupta, who was previously CEO of Roman Haas, on a long term growth project where we looked at more than 2,000 companies actually doing a quantitative analysis about what results in long term growth, and then applying our learnings through qualitative learning and case study to the asset management industry. So from there, we really ended up focusing on technology and how one can grow and create efficiencies through technology. And I brought that forward to, the rest of my career, including, at US Treasury and as Secretary of Banking here in Pennsylvania. But Wharton is really the place where one learns the most about the intersection of things like technology and finance. And it's been a great opportunity for me to really dig in there.
Staying in your private sector experience, what were some of those tech learnings? What were the things that you learned and realized that could be improved when it comes to technology?
Right. So I'll start from Vanguard and go backwards. The long-term growth project that I had the great opportunity to work on, that lasted more than 2 years. And so just to dig in a bit deeper there, we did a quantitative analysis of 2,000 publicly traded companies. We created actually a series of metrics using existing publicly reported metrics, things like indexes of revenues, for example, and then applied them over different snapshots of those 2,000 companies. And from that application, we narrowed the field of companies that we were interested in because they had performed very well over a very long period of time to companies in medical technology, to financial services companies, and actually to semiconductors as well. And then we built case studies. So this is, similar to some of the other academic work that's been done out there by consulting firms and by management experts. But we felt that our study was unique, and then applying it to asset management in particular was a great learning opportunity for me because we really dug into what business models look like in asset management. And I'm sure, as you well know, they actually vary very significantly. We have very large companies structured as public companies. We have very large asset managers structured as private companies. And then we have actually very large companies with unusual share class structures. So that led us to really think about, how does human capital work in those different types of business models? What types of people are useful in what roles? What are the leadership and management theories we can draw from that? And then how do those companies grow, whether it's organic growth through M&A? Some industries like in the pharmaceutical industry, for example, or medical devices, M&A is really the way that those companies grow because of the regulatory structure. And what we found, I think, at a very high level is that investment in technology as an opportunity for R&D and as a long-term growth opportunity really made sense across the board. But it was a really interesting discussion. And I think part of the learning opportunity there was for us to come together and to talk about what we found as leaders and to think about how we can change what we're doing. And I really, was very fortunate to bring that forward into other work that I did, like, for example, at US Treasury, where I had the opportunity to really see across the industry. I think then just backtracking to JP Morgan and PIMCO at a high level, looking at the inefficiencies, I really became very interested in, what kinds of technology, blockchain, for example, and this is really what started my interest in blockchain technology and distributed ledger, how technologies like that could help us clear and settle faster, safer, and more efficiently. So I became very interested in how blockchain and distributed ledger really do have the capacity to make that process more efficient and to conduct it with less risk. And then, PIMCO as well, I think was a great opportunity to see that because fixed income in particular is a very idiosyncratic market. Bonds differ significantly. We trade bonds on different maturity dates. So things like coupons and interest payments, for example, are idiosyncratic. And it's very useful, I think, to think about how technology like blockchain can help us do that in a safer way. And we may get to cybersecurity later, but as you and I have talked about, I think that's another great opportunity when we look at the risks to the financial system for blockchain and distributed ledger to play a role in making our system safer.
I love it. I mean, so often in my life, it's like this tunnel vision around how do we use blockchain technology to stop illicit activity.
Mhm.
And it's so useful to have these conversations around what is the promise of the technology, right? Not how to stop bad guys from abusing it, but what is the promise of the technology itself? And obviously, I think a lot about payments. I had a great conversation with Dante Disparte from Circle a couple weeks ago on here on TRM Talks. But it's also so important to understand the speed of settlement and these other sort of real world use cases for blockchain technology and how, like, when you talk about a new financial system, that speed is really a huge piece of it. You mentioned US Treasury in there. Can we delve just sort of a bit into your public service and sort of the work that you did at Treasury? I think it is unique to find someone with that deep sort of, financial institution experience plus Treasury.
Yes, absolutely, Ari. Working at US Treasury and as acting Secretary of Banking here in Pennsylvania were great opportunities for me. And I will, always appreciate the opportunity to learn from those experiences and having led, the offices in the department. At US Treasury, as Deputy Assistant Secretary, oversaw three offices. So, Financial Institutions Policy, the Office of Critical Infrastructure, which was essentially the cybersecurity office, and then the federal insurance office. And as part of the federal insurance office, a rather large team overseeing the terrorism risk insurance program. So I had the opportunity to really look across the financial sector to see all of the types of financial institutions that we make policy for, to engage with those financial institutions and learn more about them. Everything from asset managers to banks, for example, insurance companies, money service businesses, and then to dig into how insurance works and what programs exist in the federal government around insurance. Because, as you know, we don't regulate insurance at the federal level, it's regulated at the state level. But the Federal Insurance Office plays a role and also plays a role internationally in terms of working with things like capital and liquidity requirements and international standard setting bodies. So, I had the opportunity to convene a series of roundtables working with different private sector groups to learn from them and to really dig into the work that they're doing. And I really feel as policymakers, that's essential to engage with the private sector to learn about where their pain points are for us to make good policy and for us to not only regulate strongly and effectively and with very stringent consumer protections, but also to support innovation. Things like you mentioned, Ari, using blockchain, for example, in the anti money laundering space for protection. I think that comes from innovation that we as regulators and policymakers also have a great opportunity to support through policymaking. And understanding how to do that really comes from engagement with the industry. So, at a high level, I loved it. I appreciated the opportunity to do it. As acting Secretary of Banking here in Pennsylvania, I led the department through the banking crisis last year, and that was on a leave of absence from Wharton. But the department oversees 290,000 financial entities here in Pennsylvania, which that number surprises some people. But we actually have, a large number of entities here, not just banks, but also asset managers and money service businesses and financial advisors. And then the department oversees more than 3.5 trillion in assets under management because of some of the, businesses that we have operating here. So, I've worked through and led through crises before in the financial sector. And so, really, I think just working with the team and being prepared for what may come. And I'm very proud of the work that's been done both at Treasury and at banking. And will always appreciate the opportunity to have served in that capacity.
Fantastic, and there's, like, a million things I wanna dig into there. At the outset, you kinda mentioned 9/11, and obviously, it sounds like you were at Treasury dealing with some of the aftermath in that time period. I was a prosecutor in the wake of 9/11. I think, basically, I could probably look back on my career and connect many dots back to that day. The Office of Terrorism and Financial Intelligence, where I worked at Treasury, was stood up entirely in the wake of 9/11. Talk a little bit about that when you're talking about sort of how do you think about that experience in your career, but also sort of from a financial perspective?
Yes, I mean, that was a tragic and horrible time. It's an understatement to say that, Ari. And I was actually at JP Morgan during 9/11. So I had joined JP Morgan in fixed income derivatives right out of Wharton, and then had moved to trading the credit default swap trading book. And I was actually in Tokyo at the time. So I started at JP Morgan in New York and then had moved to Tokyo. And Tokyo, as I'm sure you know, was the first market to be scheduled to open after the attacks. And so it was really a horrible time dealing with, the aftermath. And I was very early in my career. And so it was really a stunning moment. And I would say one thing that I learned is really thinking first about the people around you, and not just directly in your view at your business, but also the people that you're working with. We had counterparts at Cantor Fitzgerald, for example, who I'm sure you know were devastated by 9/11. But the counterparts in Tokyo were still speaking over the box. And then just, thinking about how would we manage the markets and what's best, not just for the business, but also for the financial sector at that time. So there were a million things to think about. But the first thing to think about is the people that you work with directly and that you collaborate with outside your direct business. So that's one takeaway that I took. Just through many different crises, I think it's important to really think about what are the essential things that one has to deal with. And then, having those strong relationships with folks around you so that you can manage and lead together through that no one person is an island through any of that, and that we are here to support each other.
Beautifully said. And in terms of lessons, obviously, years later, you were able to impart some of those lessons during the banking crisis, in the last year or so. Talk me through that a bit.
Sure. I think it was unusual, or it hadn't been experienced before, in that the impact of it, the immediate impact of it was seen in regional banks. So primarily state regulated banks, but Silicon Valley Bank, for example, is the bank that folks talk about when they talk about the banking crisis of March 2023. But there was actually a bank that fell before that. That was Silvergate Bank, also in California, as was SVB. And I think it took folks a little bit to really unpack the risks that were on balance sheets in those banks. Some of the banks were referred to in the popular media as crypto banks, but in fact, their businesses were much more complex than that. And they had interest rate sensitivity or interest rate risk on their bank portfolios, which is something that all banks experience due to the activity that we've seen in interest rates. So, as regulators, we really had to think about not just what was happening immediately, but what could be a longer term impact of that. And then how does our financial infrastructure work? So if we put a policy or regulation in place for banks, for example, that can have an impact on asset managers and obviously an impact on consumers. So that's something I always think about when I think about policy. But candidly, it's also something I enjoy thinking about, and just having the opportunity to really think about how does the regulation interact with finance and what's happening with technology, and how can technology help us improve those efficiencies to reduce risk over the long run.
Thank you so much for that. I think it's so interesting. I think of your role at Wharton and how, as you're teaching and you're convening and you're doing all this extraordinary work, it's so cool to bring that real world experience, that real world expertise, whether it's from the financial institution side to the work that you did, just a year ago in Pennsylvania, reacting in real time to a banking crisis. I mean, that's something that students will be taught and will be talked about in academia for years. So let's talk about that work a little bit, right? You are doing all of these things. I'm blown away at times by how much convening, how much teaching, how much thought leadership you are doing really across all of these different spaces. I get to just focus on crypto, illicit finance risk, right? You're talking crypto and AI and blockchains. How is sort of Wharton thinking about this work, that intersection between finance and business and technology?
I joined Wharton as part of the alternative investments program, the Harris Alternative Investments Program. So, working with private equity and venture capital, which I happen to also teach now at Penn Law School. And then, when we had the opportunity to launch the Stevens Center for Innovation and Finance to think deeply, do research, and engage students, importantly, I raised my hand to launch that center and to work with others across Wharton to do so, and to really lead the work that we are doing on things like crypto and AI at the intersection of finance technology, and how it interplays with policy. And I think the Center for Innovation and Finance is unique in that we make a concerted effort to leverage the great expertise and the energy and the leadership of our students. So We're thankful that you were able to join us and be part of our Future of Finance initiatives. And we brought together industry leaders on key topics like banking and payments and crypto and AI and sustainable energy to talk about and really think about, what is the long-term outlook on those issues and to build our community. That's one of the greatest things about working at Wharton is having a community inside and outside Wharton where we're thinking and doing research and programming together. And then I lead Wharton Cipher Accelerator, which was launched several years ago by myself and a group of incredible Wharton students as a blockchain based accelerator. And amazingly, our first cohort really ran the gamut, not just in terms of fintech companies, but also companies using blockchain for things like real estate tokenization, for example, healthcare supply chain management for surgical devices, energy. So we scaled and worked with an incredible energy related company that's using AI and tokenization to manage energy data and then blockchain for other components of their infrastructure. And all of these have been a great experience. And then when I returned from leave of absence last year, we expanded and continued to elevate Wharton Cipher Accelerator to other emerging technologies. In fact, we're open to any emerging technology now, but really with a focus on AI, as that is, very important to not only finance, but across the board. We are actually working with a project called Giga at the United Nations. Our students are really leading the effort. So, Giga is a joint venture between UNICEF and the International Telecommunications Union at the United Nations to map and connect every school in the world to the internet. And to do that, they're using AI, satellite imagery, digital payments, and blockchain. And we have the opportunity to work with them, and we're actually scaling and cultivating three of the tech projects in their technology hub in Barcelona. So our students are doing that. We have some great engineers on our team as well. And they will be presenting at our Demo and Innovation Day on April 12, along with this incredible cohort of other AI and blockchain companies.
My sort of follow-up was like, what is the role that academia plays in this sort of intersection between finance and technology? And I think you sort of answered it, right? It's incubating, it's accelerating, it's working closely with students. How do you see the role that academia can play as, I talk about building a safer financial system, right? I do think that academia is sort of a key pillar in that.
I think our students are really on the cutting edge. And I say that pretty frequently when I talk with folks. Students are the ones who are leading innovation. And we as, academics, I think have the great opportunity to work with our students and to combine that with expertise across the industry. Our students are deeply engaged in these communities around crypto. They're in the conversations, they're in the chats, they're building. Sometimes we'll have an idea about blockchain or things that we can do with the accelerator or research, for example. And our students will be the ones who will say, well, actually, we should look at XYZ because here's what's happening in the developer space. And I just think that's incredible to be able to learn from them and incorporate that organically into the work that we're doing. Education is absolutely essential for helping folks understand these rather complex technologies, how they work across borders. You mentioned payments, for example, explaining to policymakers how blockchain or distributed ledger or crypto can help us make payments across borders more efficient and how does that increase financial inclusion, I think is one of the roles that our educators play. And it's absolutely essential as we think about how complex our financial system is and how to support innovation. That innovation is what keeps us leaders in this country. So as academics, I think we sort of are in the center of all of that.
Amazing. I'm going to stay with crypto for a moment and blockchain, which you sort of got into. What are the things that excite you right now? What is the promise in terms of the technology? You mentioned payments, you mentioned financial inclusion. We talked about speed of settlement. Then I'm going to ask you the flip side as well.
As I mentioned, the original reason I became interested in blockchain was because of trading, clearing, and settlement. And that is, I think, an incredible use case. And in fact, it's been implemented. So, as you know, our financial institutions, both here in the US and outside of the US, are using blockchain to clear, settle, and facilitate cross border transactions. And I think it was a bit ago that, JP Morgan and the Monetary Authority of Singapore, for example, announced that they had cleared and settled money market fund transactions using distributed ledger and cross border FX transactions. And there are a lot of great efficiencies that can be gained by using distributed ledger for those transactions. We have great innovation happening here on the same note at the Federal Reserve. And we talked a bit about financial inclusion, thinking about folks who need to send money across borders. It's a very inefficient system, and the fees that one can incur doing that and can be really discouraging. So, crypto has the opportunity, I think, to make that more efficient, to reduce costs, to increase financial inclusion. And I think that's a really important use case that we should keep in our minds. Another thing that excites me, frankly, is tokenization. We saw the first tokenization of a private equity fund by Securitize with KKR and a real estate fund, over the last year plus, and recent tokenization of a mutual fund at BlackRock. And those are really interesting. But overall, there's a lot of innovation happening in this market. We talk a lot about some of these tokens, and certainly there are thousands of them at this point. And I know we're going to talk about some of the downsides as well. But some of these layer two protocols, I think, also have the opportunity to potentially really scale how transactions take place and to help them happen more quickly. And so I'm interested in those as well.
I think it's so important to talk about the promise of this technology as we sort of think about risks and how to mitigate them as well. So let's just hit on some of those risks. It's interesting. I recently had Todd Conklin, who is the Deputy Assistant Secretary at Treasury working on cyber and AI. They just put out very recently a report on AI enabled cyber and fraud risk. So let's more broadly just talk about sort of what are the risks that you're seeing, whether it's from blockchain, crypto, AI, or sort of other emerging technology.
We have seen, unfortunately, a lot of criminal activity in the space as well. We saw the crypto crash of a couple years ago, Terra Luna, and I think the industry learned more about algorithmic stablecoins at that time and what some of the risks are there. We saw the FTX bankruptcy, which impacted everyone in the financial sector, not just in crypto. And that was a very unfortunate situation, I think, with repercussions, for years to come. Enforcement actions against Binance, for example, and other fraud and criminal prosecutions. I think that one thing policymakers need to do, and I believe firmly that Department of Justice, for example, and other regulators on the enforcement side are working incredibly hard and intelligently to get ahead of these issues. And they have proven that they can do that. I think there's also an opportunity for us to provide more clarity in the regulatory side because businesses operate best when there's clarity and we can better enforce when there's regulatory clarity. So I think that's an opportunity for us as policymakers. And I think, there's some potential that we may move some legislation forward in the near future. But I think also as we do that, we need to keep in mind, consumer protection is something I've really had my eyes on. And in fact, I published a paper on regulating the crypto space. And myself and Professor Brett Falk at Penn Engineering put forth, a very high level framework for crypto regulation that involves not only stringent consumer protections at the national level and interagency coordination, because we do have such a complex regulatory financial framework here in the US, as well as coordination with international standard setting bodies like the FSB, the Financial Stability Board, and with states, which have a very important role to play not only in regulation, but also in innovation. And then I think not only with crypto, but also with AI, something to think about carefully is industry standard setting. So, Brett and I have talked a lot about how technology and standard setting really facilitated how you and I can text with each other. Or if we send an emoji to each other, you will see the happy face if I send the happy face. And that happens because of industry standard setting. And industry standard setting involves obviously the industry and experts in thinking about what works best based on the technology. It's not an answer for everything, but there's a very important role to play. And again, engaging with the industry is important in understanding that. And then we have a lot of good examples of how industry standards combined with a regulatory mandate, for example, on the municipal bond side with the Securities and Exchange Commission, can play an essential role in regulating the industry. So I think there's a lot of work to be done there. I think the other thing I would mention is governance. And on the AI side in particular, we're hearing a lot about governance. And obviously, that's essential. One thing I'm thinking about on the research side is corporate governance as well. So, there's a view that we have the rules and regulations and the governance requirements that we need to regulate AI already in the financial sector. So then I think the question is, how would that fit into our traditional corporate governance framework for listed companies? For example, listed companies are required to have finance expertise on their audit committee, but if they do not, they need to explain why they do not. And so thinking hard about what kind of expertise is needed in the age of AI in corporate governance overall is important. But then I do think there's been some specific governance or at least clarification that would be needed in relation to AI, because I do think that the technology is new, generative AI certainly, related to things like transparency or model transparency, data management, for example. We saw the EU AI Act recently passed, and I think there's an opportunity there. And the executive order on AI that was issued, a very important order, the provision that related to the financial sector called on US Treasury to publish a report on cybersecurity, as you know. And that was recently published. And I think that we can even extrapolate from that further and continue to draw best practices for the financial sector on cybersecurity related to AI. But I think we should be doing all that we can to draw best practices and then to leverage technology like what you're developing and in the AI space as well.
That was an amazing answer. There's like so much to unpack there. I feel like I want to go on for like another hour. I have like 6 questions from that to include the great work that the states are doing, which you got into. I love the idea of standards from the sort of ecosystem. It's absolutely critical right now. Obviously, the cyber piece is so important, right? There's so many hacks and exploits in the crypto ecosystem. We trace the funds, but by then it's arguably too late. But we're going to finish up here on this really. Look, I see you everywhere. You're convening, you are hosting events, you are writing, you're saving the banks in Pennsylvania. A, how do you do it all? But then sort of what are you doing when you're not doing all of those things? What does Sarah Hammer do outside of her role in this space?
Oh, that's so nice, Ari. I'm really flattered by what you said, and I appreciate the question. I would say I love what I do. I love working at Wharton. I love being part of Penn. I love working across the industry. I love working with folks like you. And that's really what keeps me going. A lot of what I do is really work, but for me, it's not work, to be honest. So things like doing research. I wanted to mention that I'm co-editor of the forthcoming Oxford University Press book on generative AI. It's expected out later this year, and I'll be authoring the chapter on AI and finance. Those are things that I love to do. So I know that's a pretty general answer to your question. I do have outside interests. I love sports. I love my friends. I love to travel. I love my family.
Really well said. And Sarah, thank you so much for joining TRM Talks for a really, really fun and informative conversation.
Thank you.
I think this was a really different conversation than some of what we've been having. I think that, I often am asked, hey, what are the biggest issues in the space? And the expectation is that I say something like, is it a commodity or is it security or is it something else? I think the biggest issue in the space today is use cases. I think we could do a better job of articulating use cases for blockchain technology, for cryptocurrencies to policymakers and regulators. And I thought Sarah did a truly extraordinary job of articulating the financial institution use case, right? The 24/7 faster, speedy settlements, cross border, cheaper payments. I thought she really sort of dug into the use cases in a really, really positive way. I think that if we're going to really, really see this ecosystem explode, it's going to be led in some part, or at least in large part, by traditional financial institutions. We saw that with the ETFs that we've talked about extensively on TRM Talks. And I think this idea of sort of faster settlements is a huge piece of that. So it was really fun to have Sarah bring her time at JP Morgan and Vanguard, US Treasury, her time in Pennsylvania during the bank crisis, and then finally her time really as a convener, as a thought leader at Wharton, the most important business school in the world, as she said, and I tend to agree. So really, really great conversation on so many of those levels. Next on TRM Talks, I sit down with Kevin O'Connor, FinCEN's Virtual Assets Chief, to discuss the U.S. Financial Intelligence Unit's role in regulating the crypto space. If you love the show, leave a review wherever you're listening to it. For more crypto insights, you can also subscribe to the TRM Weekly Roundup at trmlabs.com.
TRM Talks is brought to you by TRM Labs, the leading provider of blockchain intelligence and anti-money laundering software. This episode was produced in partnership with Voltage Productions. The music for this show was provided by Ecolix.
Now, let's get back to building.